Welcome to Mission Oriented, a VeteranCrowd podcast that showcases veteran talent from both the private and public sectors. Their impact is everywhere. We are here to uncover it. Here's your host, Bob Louthan.
Welcome to the Mission Oriented podcast on the VeteranCrowd Network. I'm your man, Bob Louthan, coming live tonight from Richmond, Virginia. I've got my guest tonight, Sherman Williams, U.S. Naval Academy class of 2003. Got that right? And was an intel officer in the Navy. Went on, after he got out of the Navy, to get his MBA at Chicago. He's been a Kaufman Fellow. He's involved with Techstars. And now he's one of the managing partners at AIN Ventures, the Academy Investor Network. Sherman, welcome to the program. Thank you for being my guest tonight.
Thank you.
Hey, I want to jump right in. You know, I've known Emily McMahan for a long time, since back in the days with, I guess, what do they call it, Capitol Post in Washington, D.C., before it became Bunker Labs. And so I thought, take a second and tell everybody what the Academy Investor Network is and how you guys came up with this idea.
Absolutely. So Academy Investor Network, or otherwise AIN, we are a captive capital venture fund. So like your standard venture fund, where we invest in pre-seed and seed stage startups. So we come in really early, and we invest into startups that are at the intersection of dual use and deep tech. What does that mean? Dual use means companies have both government and commercial customers. Deep tech means that companies are building advanced technologies that are out of the R&D phase, but those technologies do not yet have wide-scale commercial adoption. And those same technologies can either disrupt an existing market or create a brand new market. And what we do is we focus only on a few areas at the intersection of dual use and deep tech, and those areas are space technology, sustainability technology, life sciences, and lastly, artificial intelligence and machine learning developer tools. So that's what we focus on out of the fund. We do have, separate from that, we do look at veteran-led startups. I want to be clear that our companies that sit at the intersection of dual use and deep tech do not need to be led by veterans. But on the opposite side of the house, our veteran-led startups, we're industry agnostic there as far as those veteran-led startups. But we do have a strong software bias, mainly looking at folks that have built building software type businesses that can scale, and that's for scaling purposes, because those companies that scale that way can produce a certain amount of returns. So that is a venture fund of AIN Ventures. And what we also have at AIN is we have a syndicate, the Academy Investor Network Syndicate, because the syndicate consists of graduates from the 5 U.S. military service academies. And what we do is we bring deals to that syndicate that are heavily born out of the fund. So you can imagine we'll invest in a deal out of the fund. We watch the company as it develops. And let's say a year, 2 years later, we will then bring only the best deals to the syndicate to invest into.
So you grew up in Chicago. How'd you end up going to the Naval Academy?
So, it was just military enthusiasm. My father, and that's probably the catalyst to get me to the academy. Honestly, I wasn't the absolute most focused, I guess, in high school. I don't think I was. I know I was as an adult now. Looking back, I know I was not. So it was really the kind of guiding hand of my parents. Once they expressed interest, it was kind of like, hey, this is happening. I matriculated to the Naval Academy, to be exact, through the prep school, Naval Academy Preparatory School up in Newport, Rhode Island. And I think that I think it was just the challenge of it, actually, when I got into it. I think I was pushed a bit in life, but to be fair, my parents had me really young. So they were really, as they should be, they were focused a lot on their life. I mean, they were younger than me now when I was, in high school, et cetera. And they were trying to live and build their own life and define what that would be and what that would look like. So I was kind of left to my own devices a good amount. as a kid. And I think that the prep school was the first time I was really pushed. And something kind of in the bottom of my gut told me I would be the better for it if I stayed in that ecosystem. And it was also very helpful at the prep school. They have a lot of guys from the academy that come back, talk to you, and say, "Hey, rough place to be, but a great place to be from," et cetera, et cetera. And it kind of made sense to me. I would say plebe year was, I wouldn't say by plebe year, but definitely by youngster year, I guess I was kind of brainwashed and locked in. Youngster year is our sophomore year. I know it's a different term for it at the different academies, but so I was kind of brainwashed and kind of locked in. So that's what kind of got me there. I would say it was family, and then when I got there, you don't have to stay. I mean, but it was kind of the challenge for it, and I didn't realize that I liked hard things at that time. It kind of got my juices flowing. Now, as an adult, reflecting back, I always tell everyone, it's January, 24. This being recorded. When the new year rung into 24, people are like, "Oh, hope this year is better than last year, easier than last year." And I don't pray for or hope for easy anything. I just hope for the strength to endure hard things, right?
Life is a series of plebe years,
Absolutely, yeah, absolutely. But I don't think I had even the devices to articulate that at that age. At the age, I went to the academy also. I started at 17 years old, by the way. I was very young. I started school early. That's why. And so I was very young. And so I didn't have the devices or faculties to even articulate that. But now I do realize that was in me. I just didn't know what it was. I just stayed and just kind of stayed. I kind of followed the light, if you will. So that was my journey.
Yeah. You picked another hard path after you got out of the Navy, going to MBA programs. I mean, all these top schools, right? That first year is pretty rugged. And then you got into, you got out and got into the kind of into the investment banking and venture field there for a while. So you've built a nice resume to get ready to launch AIN.
Yes, yeah, no, it was quite the journey and path. It was a path purely of intellectual curiosity. When you graduate the academy, the academy is great because you can embrace the suck. But the only bad thing about the academy, not bad thing about the academy, but the thing that you don't get out of the academy is you're not left to your own devices. Like everything is very structured, right? And I think they're hoping to structure the heck out of you so that you can continue to be that way, coming out. And I think it worked on me, honestly. And I was very intellectually curious about things, particularly finance. You don't really have, I always say you don't really have that exposure at the academies. It's, it slants, as it should, it slants a lot more towards engineering and science at the academies. And I think that's a good thing. But I was really interested in how money moved and worked. But I also was interested in innovation and technology. And I like to say that it was that intersection of finance, technology, innovation that interested me the most. I started discovering. I was reading about it when I was a junior officer, a ton, and knew that one day I was going to go pursue that. And I did, about 7 or 8 years after graduating from the academy, I did that by attending the University of Chicago Booth. And then back to doing hard things, I wanted to figure out how can I learn the most, the fastest. And everyone says, well, you want to do that, you're going to work a lot. You're going to work, 80 to 100-hour weeks, but you go be an M&A, mergers, acquisitions, investment banker, and you will learn, right? And so that's what I did. Because I said, okay, let me sign up for what is supposed to be the hardest thing. Let me learn as much as possible, as fast as possible. And even then, at 32 years old, I don't know if I didn't know that I really liked hard things. Again, maybe it was more obvious and clear to me then, but I don't think I even had the verbiage to articulate what it was. As I've gotten older and reflected back, it was, over the last probably 6 or 7 years, I found hey, it's the hard things I like. That's what gets me going. I like to have the saying, all the beauties after the struggle, right? And I just want to be around beautiful things, right? So let's go through the struggle. Let's go through the suck. It's going to be amazing on the other side, right? And I'm going to find a way, and also screw the other side. I'm going to find a way to enjoy the journey while I'm in it, right? Enjoy being pushed. So, because you could be sickly, or I like to say also health is wealth, right? You could be sickly or not have the ability to even be pushed. If you've ever been sick, as a lot of people have, you get even a simple cold or something like that, you're like, this sucks. I can't do what I want to do. I can't push myself, right? I need to recover, right? So it's a blessing just to be able to push yourself.
So let's talk a little bit. Let's look forward here. Two things I want to make sure we talk about. So we got the Mill Vets Conference coming up next week. Hands down, I think. I mean, the question is not why to go; it's why aren't you going? I guess is what I've told some people. But what are you looking forward to next week? It's going to be a great event.
The number one thing when I go to these events is I got the Bunker Labs zip up on. I went to the Bunker Labs and I'm an ambassador for New York for Bunker Labs, and I went to the event last week, and it really struck me while at that event. I've noticed this at several of the other veteran kind of entrepreneurship / VC ecosystem events. I just get a lot of energy by being around that group of people. It's a group of people that I grew up with, right? I spent my formative years going to the academy at 17. I spent my formative years until I was 30-some-odd years old in that military ecosystem. So it really became me. By the time I got out, it was half my life, right? That's all I knew, other than my mother's house, right? And so I really and I kind of left that environment with business school and then investment banking, and I feel blessed to be able to come back into that environment and tap in and get energized by a group of folks that I know has a value set and system very, very similar to mine. We have a shared set of experiences also. It's a very mission-oriented group of folks. And then I'll say it again for a second time. It's that value set, that trustworthiness, that grit, particularly this group leadership. You really do need to tap into a group of folks to get energized every once in a while. It's helpful, right? And I get that from this group. It's like recharging my batteries.
Yeah, Tim Shaw does an outstanding job. I think they put together a great program, interesting speakers. Everybody's in one place for 2 days. They're going to outgrow the venue. I think they have got so much enthusiasm for it. What are you and Emily seeing? Well, quickly, what do you think happened in 23 from the venture perspective? And what do you guys think or hope? What's the crystal ball say for 24 for AIN Ventures?
Awesome. We actually just wrote an article about this. So that's being published tomorrow on the 1st.
We'll put Can we put links in the podcast notes? Okay. All right.
Yeah. So I don't know what we saw in 2023 is we saw. So venture is a very risky asset class. It's arguably one of the most risky institutionalized asset classes. And when interest rates are high and the cost of capital is high, people are less risky. Interest rates lead to what the cost of capital is, and people are willing to take less risk because it's so expensive. So what you saw is inflation come about, and inflation was really of no one's fault. We had no choice, and I think governments around the world did in retrospect, did a pretty good job of keeping us all going from trying to hurt each other in a situation because of COVID, right? You had a lot of supply chain issues, commodity prices, et cetera, went up, and inflation just naturally went up. And money flooded the system also, right? People couldn't work. If people can't work and you don't give me money, if you tell me I can't go to work and make money, then that becomes a problem, right? Mm-hmm. And so, particularly people have to be in places in person, right? Who are not professional services, can't work remotely, et cetera. And so inflation occurs, and we didn't catch it right away. We could have caught it faster, but we didn't. And we had to raise interest rates, and that caused the cost of capital to go up. And it went up so dramatically. Cost of capital between 2009 and 2020, in the year 2020, the Fed funds rate was around 0.51%. In 2023, it went up tenfold to like around 5.53%, right? In a very short time span. So venture reacted to that, and we're effectively in a VC winter because of that, because people are effectively risk off, right, versus being risk on. And so at its height, and I think it was an aberration, you saw about $330 billion of venture capital funding invested in 2021. That was the height of venture, but I think that was an outlier. In 2023, there was $170 billion, about half of money invested in venture, okay? And the majority, and one out of every $3 invested in venture in 2023 was in artificial intelligence companies, which is the latest and greatest hottest thing, right? So venture is down really hard in 2023. And what you're seeing is people taking a step back and are trying to figure out how to operate in a higher cost of capital world. And they paused, right? And it was the interest rates rising so rapidly also exposed some issues with certain banks, not the entire banking system, but with certain banks like Silicon Valley Bank, First Republic, et cetera. And so in 2024, what's going to happen? Well, I say the biggest driver in 2023 is still around. It's still interest rates, right? The cost of capital is still extremely high. So I think as long as the cost of capital stays this high, you're going to see people continue to be fairly risk off, right? And I think you can see venture probably middling along at about that $170 billion rate, or maybe there's even a potential for a drop, because what happened was people spent a lot of money. Companies took on a lot of money in that 2020, 2021, and even early 2022 timeframe. We're now in 2024, and people are coming back to market. Well, there may not be money for a lot of those people, so they're going to a lot of companies are going to go away. Now, the balancing act of what was happening is that funds raised so much money in that 2021 timeframe, they have to put that money to work. So that will buoy the market. So that gives the market a chance of even not completely falling off from that 170 billion mark, but actually staying the same, or maybe even increasing a bit. But I think a lot of that money is only going to go to the best of breed winners of their portfolio. And so a lot of speculative plays, a lot of early startups, it's going to be a very difficult environment for those companies because the cost of capital is so much higher. And what we wrote about in the article is that world is here to stay for some time, right? We're not going back to a 15 years of 0.5, 0.1%. And those low interest rates were in a reaction to the global financial crisis of 2008, right? And so I think unless there's something to stimulate dropping rates like that, I really don't foresee rates dropping to that level. Now, with that being said, I believe that the Fed has done an outstanding job in controlling inflation. Inflation has dropped off dramatically. We have a chart. Inflation has dropped off dramatically since they rose interest rates. So they've proven that they can have the effect on the system that they want. And I think that they're going to keep interest rates high until they can get inflation back towards that stated Fed mandate. They have a dual mandate with maximum employment, but also 2% of inflation. And I think they're going to keep interest rates high to get back to that point. So we're going to be in a rougher environment going forward than we were in that time before COVID. And that's what I foresee. With that being said, there's a lot of paradigm shift things happening with respect to technology, largely driven by the digitization of everything, pushing things into the cloud, and being able to analyze those things in the cloud. And what I mean by analyze those things in the cloud, that is artificial intelligence. You have so much money and so much information up there, you can start to run algorithms against that, find patterns, And instead, I don't even like to use the word AI. I like to use the word predictive analytics, right? And that is a brand new thing that we're able to do that we simply weren't able to do before we started to digitize everything and put it into the cloud. And the cloud's a fairly new phenomenon. It really wasn't around at scale prior to the global financial crisis, right? But then the other thing you need with AI is you need excellent computing power, right? You need high-end computing power to be able to run those algorithms. And you're starting to see that come online. So I think that the possibilities, and the possibilities kind of reverberate across multiple industries, from space technology, sustainability technology, and other engineering areas, life sciences. It's incredible what we're going to be able to do. We're able to do things today that we simply were not able to do 15, 20 years ago. And a lot of money is going to go towards that. So I think it's really exciting. I think for us that valuations are very reasonable relative to what they were before. And so it's a great time to be an investor. We're definitely in a buyer's market versus, I would argue, prior to COVID or even in 2021, it was definitely more of a seller's market, I should say.
Right. Well, Sherman, thank you for being on the program. How do people reach you? How do you like for them to reach out and get in contact with AIN Ventures?
Well, first of all, they should always look at our website, ainventures.com, Alpha India November, ventures.com. A lot of the latest and greatest stuff of what we're doing, papers, portfolio companies, we post things there. They can also simply contact me, Sherman at academyinvestor.com, Emily at academyinvestor.com. They can simply contact us. We're always looking for great companies. Shamelessly, we always look for people that invest in funds, right? We're a fund. And we're generally trying to connect and create an ecosystem within which innovation can arise. And we want to invest in that innovation. So that's how you get in contact with us and kind of track us. And please do reach out. Okay.
Well, we'll put a way to contact Sherman and Emily in the show notes. We'll hopefully get a link to that article that's going to be publishing tomorrow. Include that and be pushing that out. Sherman, I'm looking forward to seeing you in San Francisco next week. Thank you for being a guest on the program. Really appreciate it.
Awesome. Thank you.
Hey, you've been listening to the Mission-Oriented Podcast from the VeteranCrowd Network. Again, my guest has been Sherman Williams, one of the managing partners of AIN Ventures. Sherman, I know you're a Navy guy, but I'm going to throw out an Army. Bravo Zulu to you for your performance today. Thanks so much for being a guest on the show. And that is a wrap.
Thank you for listening to Mission Oriented. Make sure to hit the subscribe button and you won't miss an episode. To learn more about Mission Oriented and the VeteranCrowd Network, visit us at www.veterancrowdnetwork.com.